welcome to another issue of Schrand Team Connections. Today we have a special guest with us. Jessica Hart is the sales manager of Envoy Mortgage in Harrison, Ohio. We've got a special opportunity today because this is a video that I think you're going to find is very informative, and you may want to pass this along to someone who is planning on getting a mortgage in the near future, because we're going to talk about the mortgage process, but we're also going to talk about how you can put yourself in a good position to get a mortgage. Well, Jessica, you have an interesting beginning to the mortgage business, and just prior to that, you had some other things that gave a great background for the mortgage business. Tell us about that.
I was involved for several years as a Dave Ramsey coordinator in our community, and that really just sparked an interest for individuals' well-being financially. And so I have been in the business, in the mortgage lending business, for over 5 years, and seen the challenges along the way with all of the government changes, and also in the housing market. But I thoroughly enjoy helping people and seeing them meet the goals of homeownership.
Well, I can attest to that. When she's worked with clients of mine, she's done an excellent job for them, but it's obvious that that care comes through. And with that, you've gone to extra means to help people to get, in fact, tell us the difference between a pre-qualification and a pre-approval.
A pre-qualification is one that an individual can just call a bank, and within a few moments of giving them the income that they make, how long they've been on the job, how much they have in the bank, a loan officer can basically tell them, okay, this is how much you're pre-approved for or pre-qualified for. Versus a pre-approval, which is what we do. We ask up front for bank statements, W-2s, tax returns, pay stubs. We pull their credit and see, look at the overall financial picture. So then that way, when they go to meet with the realtor, or they go to start looking for the house that they're interested in and put in a purchase contract, they have that pre-approval letter, so they know with confidence that they are going to actually allow to be closing on a loan, hopefully soon.
Right. It's basically an approval for the loan, subject to finding a property.
That's correct. And it makes for a much smoother loan process and closing in the end.
Right. And from the realtor's perspective, if I'm representing you as a buyer, we almost need that before we are able to write a contract. Because if I'm representing you as a seller and an offer comes in and there is not a pre-approval, we won't even review it until such time as we get a pre-approval, or we'll make a contingency in there that it become a pre-approval for that mortgage. Because why would a seller want to take their property off the market for somebody that isn't even yet approved for the loan? It's available today. That may not have been the case several years ago, but it's almost crazy to start without having that pre-approval. So thanks for telling us about that.
Yeah, and many times when people think, well, I'll be fine, I know I've got all my ducks in a row, they think that they're pre-approved, but there are times with the loan qualifications and requirements that there are some things that need to be taken care of prior to them actually purchasing a home. And with the housing inventory, as tight as it seems to have been recently, if you go to put in a purchase contract and you have that pre-approval letter, your offer is going to be looked at closer rather than those who do not have that pre-approval letter.
There are those little surprises that come up that in some cases don't even, you're not even aware of them. And, and it's not hard to fix, but if you're under the gun, it is a problem, isn't it?
Correct. Yeah. Yes, because sometimes those problems, they can take a couple of months to take care of. Some of them are not quick fixes. You can take care of them on your credit, but also at the same time, you need that healing time on the credit score to allow your score to increase if that's the problem that needs to be fixed, or if you're needing a little bit longer time on a job, or if we're needing a tax return. Some of those aren't just quick fixes.
Right.
So it takes a little bit of time.
Well, you've all heard the expression, if it was easy, anybody could do it. Well, some of the things that Jessica does on behalf of her clients, it may not be easy, but she's able to help them in ways that some loan officers aren't able to do. And a good example of how that works is the veteran that you helped not too long ago, and took about a year to get them through process. So tell us about that, and we'll talk some more.
Okay. the gentleman came to me. He was relocating to a certain community, and he was using a VA loan. Thought that he would be ready to go. Unbeknownst to him, not having pulled his credit report for several years, there were several things that he needed to get taken care of prior to him being able to purchase a home. It ended up taking about a year in order for his score to increase to the point of a purchase. However, in that course of the year, what we did was he would just call back. In our initial conversation, we made a list of goals that needed to be taken care of, to step 1, step 2, step 3. And then we set up a time, okay, on the calendar, you're going to call back on this date. So it was more of accountability for him. And he would call me back and say, okay, I've got this taken care of and this taken care of. And some were paying down credit cards, others were getting collections removed that he was not aware of from his moving back and forth from different states. And so once that year went, when we had continued meeting back and forth and him, getting his credit in line, doing what we had set out his plan to do, he called me and said, okay, I got the last one taken care of, let's go ahead and pull credit. So I waited a few weeks, making sure that it did actually post to the, reported to the credit report, pulled his credit score, and he had definitely improved his credit. He was not only approved for the loan, but he had such a great score that his interest rate was lower. So once he received that pre-approval letter, he had his eye on a certain house, and we were closing on that home 30 days later. So it was a great success story, and I was so happy for him.
One of the things that I've discovered is if someone is in a position to where they need that help to get themselves in order for a loan, if someone like yourself is not there to help them through the process a year from now or even 5 years from now, they're in the same place they were when they first talked to you, and they're never in a position to be able to get that loan. So it's important that they start that consultation. In some cases, it may take a little time to put things in order, but then they're able. And that's kind of a fun closing when they knew they couldn't do it before, and now they're able to. You mentioned one other thing, and it's probably good to discuss this for a minute, and that's the value of your credit score, not just that you can get the loan, but the effect that it has on your interest rate.
I don't think many people realize how important your credit score actually is. And a few loan officers do pull credit every single day. We're looking at the credit reports all the time. Many times with customers, I'm able to help them, give them quick tidbits on what to do in order to improve that score. Other times it does require a professional credit counselor, and we can refer them. However, one thing that I always advise friends, family, customers, is that if you're looking to improve your credit score, if you have credit cards, keeping those balances at 50% or below of the available limit will definitely improve your score. I pulled one recently that a gentleman had lowered his credit score down to 40% of the available limit, and he had an immediate effect of 35 points on his credit score. Another one is your trade lines. If you have multiple credit cards open and you'll be looking to purchase a home in the next few months and you're just wanting to get your credit score up, is going ahead and closing out the credit cards that have been open shorter. You want to keep the credit cards that have, with the longevity is what the credit report is looking for. The score likes the longer accounts that have been open, because then they can see that you're consistent, you're on time, and you are keeping, the accounts being paid. And so anytime there's a longer reporting action on the longer accounts that have been open. So if you're looking to purchase in the next year, that's one thing that I definitely encourage people. However, if you're looking to purchase that home in the next couple of months, closing cards out might not be that best option, because closing out accounts can also have a detrimental effect right at first. You do need that healing time to allow that to bounce back.
So keep the old ones and get rid of the young ones.
That's correct.
Okay.
Yeah.
You also mentioned to me a little bit earlier about probably almost an epidemic problem today, and that is student debt.
Correct.
And What kind of effect is that having on young people or young couples that are trying to buy their homes?
Unfortunately, we see that an awful lot, that the student loans are going with our clients for years, and it's almost like having another mortgage payment. When you have a husband and a wife, especially combined, both carrying student debt, it definitely can have an effect on their debt-to-income ratio and how much they can get approved for a house. There have been, especially recently, I have had to, the home that they are really wanting to have and to go ahead and purchase, they wouldn't have been able to otherwise unless they had a non-occupant co-borrower. And luckily enough for the individuals, they've been able to add an aunt or an uncle, a parent, to that loan just to help them along the way. And the family members have been gracious enough to do that.
And that's one more opportunity that you might have by talking with someone like Jessica that gives you the things that you need to do to put yourself in position to be able to get financing. Are there other issues that are current today that you're seeing at any number?
I would just say those that, if there was a loss of a job and just getting behind payments and not realizing the detrimental effect of getting behind. Everyone, doesn't think to go ahead and pull their credit, and to do a financial checkup on that credit score. You don't realize that there might be a medical collection on there when they automatically, the hospitals or the doctors will go ahead and send it to the credit report and report the collection agency, and unbeknownst to you now, you have that collection on your report. And so those things can definitely have a lasting effect on your score, and they can definitely increase. I know one personally that we went to pull their credit. They had scores in the 800s, and they had gone through an awful accident and had, all the bills start coming in. They had a record of those bills being paid, but unfortunately one slipped through the cracks. Even though they paid it, the collection company accidentally reported it to the credit bureau, and they went from over an 800 credit score to high sixes. And luckily enough, they had the receipt showing that they had already paid it. And then when they went to report it to the credit bureau that it was paid, it still took about 6 months for their score to get back up into the 700s. They were wanting to refinance their home, but because of an error with the collection company, it still affected them. So I do advise people to definitely go to annualcreditreport.com, pull the credit report. You will get that free credit report every year. It does not give you a score, however, but it does show you what is all reporting on your credit report. And it's good to do a financial checkup once a year.
That's good. But in terms of credit reports, too much of a good thing can not be good. Is that right?
That's
because
correct.
That can negatively affect your credit?
Yes. You don't want to pull your credit. You don't want to go and have your credit being pulled too many times. However, you are allowed to have that credit report pulled once a year. The government allows that, to where you can go to the annualcreditreport.com, pull that, and they will give you a report once a year. That's correct.
Now, this couple that had the unfortunate circumstance of having an unjustly applied credit collection on their account, that would have affected their interest rates?
Correct.
And in many cases, it can even affect the kind of loan that they get. And there's, tremendous importance to the credit score, and you had even mentioned the insurance. So, what are some of the other things that we're seeing in the mortgage? Just having someone prepare and become ready to get finance for a mortgage loan.
We are seeing oftentimes with the younger folks who are they're self-employed, or they are commission only, and thinking that they're ready to go ahead and purchase a home now. However, with the self-employment, we need the 2 years of self-employment, but also so many of them write off so many deductions, and so it helps them. but at the same time, the more they're writing off, the less it's showing for their income. And so with that, we are seeing a growing trend of that, and so they're trying to be, financially wise and prudent, but at the same time, the income, we need to show the income. And so that's one thing, if you are self-employed or if you do claim a lot of deductions, to definitely seek a loan officer to see what you would in fact be pre-approved for, the amount. Also, one thing with loan products that we are seeing is in becoming more popular with the FHA rates going up and the RD, USDA rates, the PMI is starting to go up, is the conventional 5% down, and that can also be gift funds. And so that is, there's no upfront funding fee on that, and it's a lower PMI. It doesn't stay on for the life of the loan versus the other mortgages, the other loan products. And so that is something definitely that we are seeing more and more go towards.
You mentioned a term that some people may not yet understand what it is, and that's gift funds.
Gift funds.
Give us a quick description of what that is.
Gift funds are your down payment can be gifted from a close family member or a very close friend. We need to show documentation of that gift, but that is definitely a viable source. I know many times it's either a wedding gift or a college graduation gift, or parents are spending their inheritance to their children early. I've been having that a lot recently, and so they said, well, we'd rather see them spend it than wait until we pass on, so we're going to go ahead and give that as a gift, and that's a great thing to do for a family getting started. So.
I think you've just created some new family conversations.
Maybe so, yeah.
One other conversation that comes up, and I've actually seen this kill a sale, where someone is basically approved for a loan. They're feeling good about buying the house. Everything's pretty much in the bag. They just need to close. They go out and buy a new car.
Yes. When I go ahead with a pre-approval with one of my clients, I always tell them, your credit is a snapshot. We keep it the way it is now. Do not go open any new accounts. Do not close any new accounts. Don't even think about buying a car and going and having them pull your credit, because we want it to remain the way it is right now. And so I always caution my buyers to do that.
Well, you can see what a value it's going to be to talk with Jessica. Jessica, if somebody wants to get a hold of you, how do they reach you?
They can reach me. My cell phone is always available at 513-748-6987, or by email, it's jhart@envoymortgage.com. And you can also see us on our website at envoymortgage.com.
That's Envoy with an E.
That's correct.
Very good. Well, thank you for listening to another issue of Schrand Team Connections. Jessica, it's been good to have you with us.
Thank you so much.